Hello everybody, hope you're doing very well and welcome to today's first ever Contenders live stream. I am really excited to obviously have started this chapter finally with you all, moving away from the average students and going totally to the Contenders and Champions live streams. So yeah, the first ever one for Contenders today, and yeah, it's going to be more of like an introduction. Let's get into what we're going to be going over today. As you can see, I've prepared quite a few slides here. Yeah, basically I want the Contenders and Champions live streams to be much more professional, you know, for yourselves and for me in the way I present my content, and for you. Hopefully with this increased quality and time that I put into it, you will notice a difference and be able to learn faster. Okay, so let me just really quickly verify that I can be heard okay for yourself. Yes, I can. Cool. And there's comments, and that's brilliant. So yeah, we've got some people watching, and let's begin then. So tonight, which needs to be renamed this evening. Let's just write this evening. I will be covering on the first ever Contenders live stream. So this is what I'm going to be going over today, and we're going to be starting with an introduction, going through these slides that I've prepared on what you can expect. Firstly, going through trading, of what you need to have like goals in terms of trading, and mainly we're going to be focused on how to calculate risk correctly. As you can see, the slides that I'll get to shortly, I'm going to be going over a few different ways that you can manage risk, and for me, this is very dependent on yourselves and how much money you are playing with in terms of trading, whether you're trading with we'll get to the slide, but that's what I'm going to be covering in detail, how you should be managing risk in terms of your stop loss and how much money you're actually putting into the trade. Okay, this is really, really important. And as I mentioned here, the Contenders live streams will be focused on theory. Okay, so trading theory and different technical analysis tools. Okay, so the Contenders live streams are really going to be like heavily focused on theory, making sure that you understand, you know, the tools that I use, and I'm going to go through it in an order that makes sense. Okay, so obviously today we're starting on, you know, things that you look for before you enter the trade, moving on upwards as we go along. Okay, in a chronological sort of order, it makes sense for me. So that's how I'll be presenting it. So that's going to be the Contenders live streams and obviously the Champions live streams, because I know we have Champions in here as well. So Contenders is obviously open for all Contenders and all Champions. And obviously the Champions live stream will be later on tonight, which will be more focused on real live trading, okay? Going through different trades together. But the Contenders focused very much on theory. Okay, so then we'll be ending with a question and answer session. Okay, so I always will be trying to say to you, keep your questions related to the live stream. Okay, so try and, if you have questions as we're going through, rather than asking random questions of how's ADA doing at the end, like try and keep the questions related to what I've been going through in the presentation. That would make sense. So yeah, that I'll end with the question and answers. So that's. Oh, let me put this on silent. So yeah, let's begin. So yeah, welcome everybody, and I am excited. Let's go. So the first thing that is really important to understand when it comes to trading, okay, is that trading takes time. Okay, this is just like some really important things that many people overlook, and they do not understand what it takes to actually become a professional trader. And I know that if you are in this live stream tonight, you want to, you know, you're taking professionally seriously. You're taking trading professionally. Losing my words there. You are taking trading seriously. Okay, if you're here tonight, it's obvious that you are seriously thinking about becoming a trader, or you just enjoy trading more than the average person. Okay, and this is something that is very much overlooked in my opinion, that you know, you're always going to get losses in trading. So I'm going to brief away from the points, but you know, when you are taking losses, which is so normal for even a media, you know, every single trader takes losses at the end of the day. But as a beginner trader, it's very easy to get disheartened by taking losses. Okay, and what I want to just highlight here is that trading takes so much time. Okay, so I've been trading for 8 years, and you know, it took me many years. For me, about 2 to 3 years before I became like consistent, really. maybe pushing on like 4 years before I was actually like doing it really, really well every day. But everybody varies. But a stat that I think I might have on a slide later is that the average time that it takes to become a consistent trader is anywhere between 3 and 5 years. So that's a real stat from a trading book, that 3 to 5 years is the average time. So you have to realize that trading does take time. Okay, it's definitely not something that you're going to be mastering overnight. Okay, that's just an important thing to grasp and understand, and that you have to think as well that to become a professional trader, just when you get that step and you feel yourself coming along and making consistent trades every single day, because that's what we're after as professional traders, is consistency. Okay, so finding that that strategy that works for you and just repeating and repeating and repeating. So it's very much process orientated trading. Okay, and for instance, even with this, I'm still putting in, for example, myself, I'm trading between anywhere from 8 to 12 plus. Sometimes we're going on 14. I can trade for a long time. Okay, so average, we're saying 8 to 12 hours a day. I absolutely love it. As I've said here, you all know that I absolutely love it. So I personally do not view this as a job at all, but it's just important to know that I put in so many hours, okay? And you are not going to become, I'll be honest with you, you are not going to become a professional trader unless you are prepared to put in a lot of hours. Because a lot of people think that trading is easy money. And I'll tell you that trading is some of the hardest easy money that you can ever make. It's not easy money at the end of the day. And a lot of people think that it is. But it's easy money in the sense that once you're in your rhythm, you can keep going. But like I say here, you're not going to be able to do it putting in 8 hours. 1 hour a day is not really going to be enough time to do this professionally full time. It is really time consuming if you want to do it properly. Okay, and and what I want to really push to you all here is that we are after doing it properly, doing it right, not doing something half-assed. If you enter something and you're only working here, nobody got to where they are now by only working 50%. Okay, so if you are only half-assing this, putting in mediocre work, putting in mediocre time onto your charts, you are not going to succeed. And that's just the reality of trading. You do need to actually put in the effort and time to move forwards. Okay, obviously when you're beginning, you don't need to be putting in 8 to 12 hours a day. As if you are beginning, then absolutely 1 hour a day is fine. Okay, I'm talking about when you are doing this full time. It's not like a full-time job in the sense that when you're a full-time trader, it's not just 1 hour a day. Unfortunately, you do have to put in the time to chart. So that's just something that I wanted to clear up here. And also the fact that I view trading as a sport. I think that it should be in the Olympics, maybe. That'd be funny, wouldn't it? But I really do think trading is a type of sport. Okay, and just think, for example, of a professional athlete. Okay, this is kind of an analogy that I would like to make. That trading, think of a professional athlete, and before they become professional, how much time and effort that they have to put in before they become professional. It's exactly the same with trading. You have to put in a lot of time and effort before you can, take that next step on. Okay. So this is just the initial entry slide, but some of you might be like, oh, I don't want to, I give up now. But yeah, it's just a first initial slide to, say, go on to the next level. And with me, I will help you the absolute best I can. And I honestly believe that, we can move forwards together, and I can really help you the best of my abilities. Obviously, the greatest thing about the live streams and having my knowledge is that I have been doing this for 8 years. I have taken all of the losses and I have learned from the losses, so I hope to give you my experience and pass that on to help you avoid those said losses. But even with all of my knowledge that I will be passing on to you, it's still gonna not be like a get rich quick scheme. So you're just because you are paying for just because you're in the mentorship of champion or contender doesn't mean that you're going to instantly become profitable. Okay, if you go out and do it on your own. Because it really does take time. Okay, moving on to the next one. I think I've done that one. So trading next is going to be not a get rich quick scheme, and this is going to tie on to the way that I'm going to be showing you how to do stop losses, or not so much stop losses but managing your risk in the next slide. Okay, So with that in mind of how we're going to be managing this, it's just really important to just highlight that trading is not a get rich quick scheme. Okay, so don't focus on the small term picture, but rather the long term vision. We are after long term, staying in this, consistently gaining money. Okay, the key word is consistency. We're not after winning 100% one day, the next day losing 100%. We're just after those small gains that add up over time. So compound interest, for example. Okay, so trading, as said here, is all about longevity. I can't even say the word correctly, but with top risk management. I'm going to pass the word, but you know what I mean. It's all about the long-term goals. Okay. So, for example, here, this is just a picture that I actually found from a trading book that I've read, and it's very interesting. But for instance, it's quite obvious. One trader risks 2% on each trade, and the other trader risks 10% per trade. Okay. So if a trader has 10 losing trades in a row, the first one will have 16,000 left that only risks 2% on a trade, or the second trader remain with only 7,700 that risks 10% on a trade. Okay, you can understand the metric behind this, that basically we are not putting in all of our capital into a trade. It's absolutely crazy. Okay, if you are trading with anywhere above 5% of your capital plus per trade, it's absolutely crazy idea. Okay, you really need to get out of the habit, and I know so many people have that habit, because when they get into trading, people like to put in like 50%, 25%. Obviously on Binance, for example, there's a very quick button to click 25%, 50%, or 100%. And enter the trade really quickly. If you trade on Binance, you know what I mean. And it's just absolutely crazy. You should never, ever find yourself clicking on those 25, 50%, or 100% buttons. And if you have, then this video is going to be extremely beneficial for you, because honestly, it's absolutely crazy idea. And Binance have got that feature to take your money, basically. Okay, it really is not there to be quick and helpful for you. It's to take your money. Okay. So just this is focused on obviously the 2% risk per trade, okay? And obviously the 10%, the trader that's risking 10%, because you have to remember that losses are normal in trading. It's totally normal to go on a losing streak, okay? Every trader will go on a losing streak, okay? Absolutely, 100%. Everyone will have a losing streak. And if you are taking 10% risks plus per trade, then, once you go on that losing streak, you're going to be, just on this example, starting with 20 grand, 10 losses in a row, you've suddenly lost over 50% of your money. Well, if you're only risking 2% per trade, that 10 losing streak, you're only down around, so 20, about 30% more or less, okay, just over 34%. So it's obviously a lot more beneficial to be risking less percentage. Obviously the gains are going to take more time, and that's obviously what we're after, the long-term gains. Okay, so next, moving on to the strategy that I like to help new beginners getting into trading, or not so much new beginners getting in, but just a good risk management strategy overall period of how you should be managing your trade. And if you have any questions about this, because it might be a little bit of a confusing formula if you've never seen this, just let me know at the end and I will answer every single question, okay? But basically, this is something that you are going to want to note down and have written down, because it's very important, okay? And I am actually going to give you 2 ways to manage your risk today. So this is the first way, that is called the 1% risk per trade. And the second way I'll cover in the next slide. Okay, so there's 2 ways and you can choose which one you like. Okay, I personally use my second method, okay, more. And I will explain why I'll explain why now. This first way I would say is a lot better if you are playing with lower amounts of money, basically. Okay, so if you're trading from like $100,000 minus or less, then I recommend this strategy is really good for you. So, most likely I think that's going to be 95% of the people watching this stream. Okay, so if you are trading, really we're talking about 7 figures less, then this is the good trading strategy for you. Okay, so this is most likely going to be most relevant to everybody here, so pay attention. Okay, so the 1% risk per trade, and I hope you all understand this by the end of this, because it's very, very, very important. You cannot overlook risk management at all. Okay, so always know the risk before entering a trade. You always need to know your get out points before you get into the trade firstly. Okay, so you need to know that entry, that stop loss, that target before you enter. Okay, so how do you work out how much you are putting on each trade? Okay, so you wouldn't just be thinking, I have £10,000, let's enter 50, let's enter 5,000 into this trade. You have to go through a strategy of working out how much you enter into this trade before you enter it. Okay, I'm going to be going over the 1% risk per trade method. Okay, obviously what I would say is, if you are a comfortable trader and you feel that you are consistent at the moment, then I would up this to 2% per trade. Okay, you want to be going along like this. Basically 2% is a decent starting amount. If you feel you are consistent at the moment, then 2% is absolutely fine. If you are more of a beginner trader, then you can move to 1% per trade. Okay, and 1% is still an acceptable amount. Okay, and so for the example, I think this was rather than just giving you the formula, I'll go over an example here. Okay, so let's say that we have $5,400 in our account. Obviously now this is over 1 Bitcoin, but at the time I wrote this up, this was 1 Bitcoin. But let's just say we have 1 Bitcoin more or less in our account, $5,400. Okay. So we have $5,400 in our account, okay? And we will only ever risk 1% max loss per trade, okay? So we only ever risk 1%. That doesn't mean we are entering the amount of 1% of 5,400. No, we are not entering that. The most we will ever lose is $54. So on any trade that is lost, the most amount of risk or the biggest loss you will ever take is $54, okay? So this is really important theory. Okay, so this is not our trade amount, but the risk should we lose the trade. Okay, so to work out how big your position size should be, okay, so this is all about position sizing. Okay, so your trade amount or the position size, okay, let me put on a chart here to better explain this as well. So let's kind of use this as an example that we're taking a trade on Bitcoin, for example. Okay, we're entering our trade. Let's say we have a 4% stop loss, which is an area of invalidation. So let's just say this is 4% exactly. I can't really line this up very well. Okay, we'll just say this is 4% exactly. And we're going for like a nice 10% gain, okay, up to the lows, okay? So this is our trade setup, okay? This gives us a 2.6 risk to reward ratio. I imagine as you are contenders in this stream, you all are very up to date on risk to rewards. Obviously, I've really quickly explained it. You should never, ever, ever enter a trade if it is less than 2 to 1. Better, you're looking at 3 to 1 plus, okay? I would imagine most people here in the contenders live stream understand that. Okay, so we've got a 2.6 risk to reward ratio trade. We've got our 4% stop loss and our 10% gain. Okay, our stop loss is placed under a last higher low, okay, which is our area of invalidation of this long position. Okay, so I hope this makes sense so far. So go back to this. So our trade amount. So let's just put this into a real example, because I really want you to all understand this by the end of the video, because it's so important. I just want to say actually that risk management is actually more important than your technical analysis. If you have poor risk management but you're an amazing trader, you will not be successful. So risk management is as important, if not more, than the technicals itself. Okay, so this is so important. Okay, let's go back, as I was saying. So the trade amount is the dollar's risk. So in this example, we're playing with a $5,400 account. So that gives us 1% of 5,400 is $54. If we were doing 2% risk per trade, then obviously this is $108. Okay, fairly simple so far, no? So 1% of 5,400, $54. So our trade amount is $54 in this example, divided by the stop loss percentage divided by 100, okay? So here you can see in this trade setup, we're entering at the market price at the moment. Stop loss is set below the last higher low, because obviously if you're in an uptrend, you wouldn't want to lose this higher, well, obviously here you can see where I'm getting this on the daily, this higher low right here. So we're looking at this higher low right here, which coincides with this old resistance, okay? I just want to make sure you can all see this really well. So this point here, and then we're looking at this exact higher low. Okay, so you could see higher high, higher low, higher high, higher low, higher high in the same candle, giving us a higher low. So 5,503 is the area that we're looking at. Okay, stop loss slightly below that level. So we're looking at this 4% stop loss, okay, for the 10% gain. Okay, so the stop loss here is 4%. Okay, so 4%. Okay, so in here you would obviously, if the stop loss, we were looking at a 2% stop loss, then you type in 2 here. If your stop loss was 4.5, 567, then you know 59 or whatever, then you type in that there. Okay, so for whatever your stop loss, so the stop loss percentage divided by 100. So here we've all got a 4% stop loss, divide that by 100, that will give you your decimal point of 0.04. If this was a 5% stop loss, then that is going to be 0.05. Okay, making sense so far? I hope it is. Okay, so then we've got $54 divided by, or just 54, the risk dollar amount, okay, divided by the percentage stop loss divided by 100, which will give you a decimal place of 0.04 in this example, equals 1,350. Okay, so does this all make sense? 1,350. That means if we lose this trade, the most we are going to lose is $54. Okay, so as lined up here, so we are risking 1% of total portfolio with a 4% stop loss per trade. We enter the trade with 1,350. Okay, if we lose the trade, we lose $54, which is 1% of our you know, that's our maximum risk, the 1%. And if we win the trade with a, let's just say 12% target, giving you a 3-to-1, okay, then obviously you win $162. Okay, so I hope that has made sense for everybody of how you work out your risk per trade. And once you've worked out your risk per trade, so if you're doing a default 1% risk per trade, then this is how you work out your position size for said trade. Okay, and it's very trade specific, okay, because every single trade is going to have a different area of invalidation. Okay, so let's say that we were looking at a totally different trade. Let's load up Litecoin, okay, against BTC, and let's say that we were looking to take a trade right now on a long position, and we were saying stop loss below the 0.5, for example, okay, and we were aiming up to the next resistance. Okay, this would obviously give you a 3.86 stop loss. Okay, so obviously we can't use the same method. We have to work out on each individual trade how much money that we're putting into it to always never risk losing more than 0.5. So basically on this example, obviously this is a 3.86 stop loss, so we would keep the same 54 divided by 3.86 divided by 100, okay, which is going to give you your new decimal place. I'm sure you understand it. If you have any more questions at the end, then just let me know and we will use this as an example and I'll do the calculations, okay? But I'm hoping that you all understand with what I've done over the last 15 minutes or so on this, that you understand that. If you do not understand, then write a comment at the end and I will cover this in more detail, okay? But I hope that you have understood that. Okay, next is moving on to the way that I do more of my risk management, okay? So the first example that I've just went through there is really what I recommend to the majority of people here. This is the way that I use more of risk management, okay? But it's not that one way is better than the other way, okay? That it's just that if, for example, you're playing with, you know, $1,000, then it's not viable to be entering 1 to 5% of your equity in a trade because your trade positions are too small, basically. So you know you have to be playing with a decent amount of money really to use this strategy. You know, let's say you're playing with $100. You know, some people will trade with $100 to practice. Okay, that's absolutely fine. So if you're trading with $100 of practice and you're entering 1% per trade, then $1, it's absolutely pointless. It's a waste of time to do that. So this strategy is acceptable slash not better. I won't say better. It's just only acceptable if you have more capital to be trading with. Okay, so that's a really key difference between number one that I've just went through and this particular one. All depends how much money you have basically in your trading account. Okay, so this one is basically that you always, and this is one that I've gone through more in public that I say that I use, and it's just the simple 1 to 5% of equity per trade. So if you you know, let's say here that you have a 5 million trading account, then the max trade size you're ever going to take is 250,000. Okay, so never risk more than 5% of total portfolio equity per trade. And every trade taken is between 1 and 5%, normally at the lower end. Okay, so then, sorry, I missed out that sentence. And then obviously, so if you're trading with 5 million, then your max trade size is you're never ever going to go over 250,000. Okay, and the average trade is actually going to only be 50,000, 1%. Okay, so basically, if you're feeling, the way that I like to do this is that if you're feeling very confident, okay, you have several confluences, then that's when you can move up to 5%. Okay, but not every single trade you're going to have several confluences. Let's say a nice Elliott wave count with your EMAs, with your fibs, with a harmonic pattern, everything lining up together, then that's what you call confluence. And that's what you call confluence, and that's what you want to see to enter into a 5% trade. Okay, not always you're going to have 5 different confluence points. So that's why I say the average trade would be 50,000. Okay, let's just put the dollar sign, 50,000. Just 1%. Okay, so it's basically you always are trading between 1 and 5%. You never ever go over 5%, but on average your average trades are not going to be 5%. They're actually going to be 1%, and then you would increase up slightly the more confidence or confluence that you have in a trade setup. Okay. So I hope that has made sense too. Again, if you have any questions, oh no, I've just realized really quickly, let me just hide. Oh, apologies for having that box up. I just noticed that it was on. That was probably a bit distracting, and I will make sure that's not on in the future. Okay, so on your way, apologies again. So on your way to becoming a consistently successful trader, you must realize that longevity is key. If your risk on any trade on any given position is small relative to your total capital, then you can weather a losing streak. Okay, conversely, if you trade 25%, we're talking like 5% plus 10, 15, 20, 25, 100% of your portfolio on each trade, then after a few losses you're out of business. It's game over. That's not what you want. Okay. And it all just comes back to that in trading, you're going to go on a losing streak at some point. You might go months without losing, months without a losing streak, okay? But then when that losing streak comes, you're totally out of business, done for the day. You're done, and that's what you obviously do not want to happen. So by understanding this risk management and understanding how much you should be entering per trade, you're never going to get into the situation where you wipe out an account, okay? That should never be happening, never. Okay, so that has gone over the 2 ways to work out your position size on a trade, okay? And that is going to be very beneficial for, just general risk management. So I'm going to move on to the next slide now. So that is bringing me on to saying to you that there is no best way to trade. So like we've just gone over there, the two trade examples, there is no best risk management way between the two. There is just generally no best way to trade. Okay, so there is no right or wrong way, only the way that works for you. Okay, that's very important to realize. Okay, and next is that you want to pick an area and master it. Okay, so if you are wanting to become a swing trader, then focus on swing trading and master swing trading. Okay, if you want to be a scalper, focus on scalping and master scalping first before you move over to the rest. If you're trying to master everything, then you're going to end up mastering nothing and just being okay at everything. Okay, it's kind of not the way you want to do it, in my opinion. You want to master something first, and then once you have mastered that, move on to the next thing. Okay, that's very important. So I've put on an example here. Don't practice or try and master first cryptocurrency. So let's say you're consistently trading cryptocurrency for a few years. You have mastered cryptocurrency and that's all you trade. And then one day you wake up and you see gold, gold's gone to 20,000 and you're like, oh my God, gold is in a massive bull market. I want to buy gold. No, that's not what you do. You don't just move markets or move what you're trading just because something else is doing well. You want to stay on what you've mastered, and then once you've mastered that, slowly move across and study other markets or different styles of trading. It's not just hip hop, go on across to everything. No, master something first, then move on. Okay, a strategy does not have to be complicated. Actually, the simpler it is, the better it is the majority of the time. And this is so true. Okay, so many newer traders, I was the same. I was totally, honestly the same. When I first started trading, I can remember it well. Going through, I must have read, hundreds of trading books, and it's just so much information that you have. You've read all these trading books, you've now seen, 100 different indicators, and you're like, wow, I need to get all of these indicators on my charts. It's just information overload. And totally the wrong way to be trading. No, you actually want a really simple trading strategy, something that like the back of your hand. If you've got 100 indicators, you're not going to know quickly whether it's a buy or a sell signal. Okay, it's actually the simpler, the better it's going to be for you, honestly. You don't want a complicated trading strategy. Okay, you really do not. The more simpler that you can make it, the better it is for you. Okay, and I saw an interesting post actually, which was quite interesting today in the chat. It made me laugh. Yes, this was it. So obviously somebody goes on to support resistance, total noob. Then they move on to Ikamochu Cloud. Okay, then they're like, Then they go on to GAN, Elliott Waves, and then they go back to support and resistance, realizing that actually keeping it simple is quite good. That made me laugh at that because it's actually quite true. So basically, it doesn't have to be complicated to be effective or to be profitable. Okay, just keep that in mind when you are working out a trading strategy. And obviously, I will show you all the tools that I use, plus more that I don't regularly use, but I will teach them anyway. Because just the way, you don't have to copy me and the way I trade. Okay, I will teach you everything, and then you can handpick ones that work for you. Okay, obviously I'll be teaching Elliott Waves, but you do not have to trade with Elliott Waves if you do not like Elliott Waves. Okay, there's no requirement to use them, just the same that I use Fibonacci. You do not have to use Fibonacci if you do not feel that it would work for you. Okay, you really want to keep it true to yourself and how you feel is the right way to be trading. If you can back test and it's profitable for you, then be my guest and handpick and a strategy that works for yourself. Okay, I will just teach you all the tools. Okay, so with that said, obviously I would recommend that you follow the ways I use because it's profitable. But yeah. It's totally up to you. There's no right or wrong way, and that's what I wanted to stress here. So, this is what I would say to you when you are making a strategy, when you are adding into a strategy or removing from a strategy. Always ask: is this increasing profitability or reducing risk? Okay, if the answer is yes, then add or remove it to the strategy. If the answer is actually no, then don't do it. Okay, it's as simple as that. Always be asking yourself a question as a newer trader. Is this increasing profitability or reducing my risk? And that's just a really simple question. Well, actually, might not be so simple, and that's what you can ask me. I would, my opinion. Okay, but you always want to try it yourself first, and then if you get stuck, then let me know. But obviously, you want to always ask: is it increasing profitability or reducing risk? That is a key question to ask yourself. Okay. So next slide. This is actually going to be the last slide of the presentation, and then we can move on to some TA. So, what is your edge? Okay, this is an important question. This is like a thing that you will get over time. Okay, you might not know what your edge is, or you might have heard traders refer to their trading edge, and you yet do not know what your trading edge is or what is an edge. Okay, so don't be disheartened if you don't have one at the moment. Okay, it comes with time. But really you have to know what your edge is. And as the point number 1 says, if you have not worked out your edge yet, then why trade? Okay. It's kind of like without an edge, okay, without knowing what your trading edge is, you're essentially gambling. Okay, you need to have worked out what your strategy / edge is in trading, to become consistent, to become profitable, to do this over time. Okay, you really need to have worked out your trading edge. Okay, so it's hard to define, but I've kind of put like an edge is doing the same thing hundreds of times that gives profits. Okay, so you do the same thing hundreds of times, and overall at the end of the trade you'll be in profit, and over every single trade you know exactly why you've taken that trade, why you're entering, why you're exiting, and where you take profit, stop losses, etc. It all comes down to that edge that you have defined over the years. Again, you have to remember, I've been doing this 8 years. A lot of you are maybe of doing this 1, 2, 3 years. It's relatively low in the amount of trading time, and once you've been doing it, it's all a learning curve. Okay. Even me, I will say I'm still learning as we're going on. Okay, you never want to stay humble. There's always something to improve on. There's always some way to improve and get better. Okay, so an edge also, I would add to this, the reason why I mentioned this is that it's always evolving. Okay, you don't have an edge. Okay, so for instance, when I started, okay, so we're talking this is like 2011. So, when you start, your first edge that you might have acquired is not going to be relevant 10 years into the future, because markets change and markets evolve. Something that works now will not work next year necessarily. Okay, so this is why you're always picking away, slightly adjusting here and there. It doesn't have to be set in stone totally. You do want to have a little bit of adaptability to it. Okay. And this goes the same with what works in a bull market might not work in a bear market, for example, and not just the market cycles, but more just the markets just evolving. You always need to be up to date with the markets and just get the feel for them and how they're going. Okay, and if you feel something is not working, then you would work on adjusting that edge. Okay, and all goes back to absolutely, you have to stay humble to the market. If you think that you know the markets, or you think that you have conquered the markets, then the market will show you that you are wrong and you will lose money. Okay, so you always want to look at it as you are always a student of the markets, and there's always something to learn. Okay, you can never master it 100%. Okay. No way, impossible. Okay, and that's why it all comes back to every single trader is going to take losses. And if anybody says that they do not take losses, it is a lie, 100%. Okay, you are going to get losses in trading, and that's just part of the game. Okay. So this last little section that I wanted to say here was what is your I did have one more slide after this. Okay, cool. So as a trader, you should have no opinion. Okay, the more opinions you have, the harder it gets out or to get out of a losing trade. And this was a quote that I taken online, and apologies, I cannot remember who I referenced this quote from, but I've put it in brackets here, but I cannot remember the trader that this is quoted from. I should have quoted it correctly, but basically it's very true, and it was a quote that I saw that I really liked that I wanted to add into here. So as a trader, basically it's like we're seeing in crypto at the moment. Okay, so just like we're seeing in crypto at the moment, so Bitcoin. Okay, if you have opinions of the market that this is going to be going down, if you are a perma bear, for example, that shorting every single top because you believe the market's going down, your opinion is that we're in a bear market still and it's going down, then you're going to keep taking losses. Okay, you are really going to keep taking losses, and the more opinions that you have, the harder it is to get out of that losing position. Okay, so if you believed it was going down every single time, you're just continuously losing as the market keeps making higher highs and higher lows. Okay, and this all stems back to don't have opinions and just trade the charts. Okay, the charts are not going to lie to you. The charts are just going to show you what's happening. Okay, and when you remove opinions and just trade, when you remove opinions / emotions, okay, when you remove the emotions from the charts, you will just be left with a very real process of thoughts when it comes to trading. Okay, and that's why if you are very let me just say this, that obviously emotions are very hard to master, so don't get me wrong, they take years to overcome, okay, to trade without emotion, but it will come when you have your strategy that you are just entering emotional, without emotions, that you just enter when your trading criteria is met, you sell when your trading criteria is met, and you have a stop loss for when that setup is invalidated. Okay, and that takes years, honestly years, to get to that level. But it will come. Okay, it will come, and I hope with my guidance it will obviously be, the process will be accelerated, and the average trader that takes 5 years / never you can hopefully do it in a few years. So that's something to look forward to. But yeah, overall, I just wanted to say that have no emotions, have emotions, but have no opinions of thinking that something's going to happen. I know from the Discord chat, obviously the general Discord chat that we have in. And not to be mean to them, but obviously in the spectators chat, you see so much people with certainty. They're like, this is going down, this is going up. And if anybody ever writes something with certainty, you just want to be like so careful, because it's totally incorrect. Nobody is ever certain of what's happening. You are just trading off of probabilities, okay? And you want your probabilities and edge in your favor. And I would just give a word of warning to be careful what you read in some of the chats, because I never comment, but it's very, let's just say, interesting, some of the things that I've read, and the majority are wrong, and they will actually lose you money. So just be really careful, not just in this group, just in general, just everywhere on social media. You just want to be careful of what you read out there, because there's so much misinformation that it's probably going to lose you a lot of money if you do not be careful with what you listen to. Let's just say that. Okay, so finally, this is the last slide. Have a plan. Okay, and this is something that we're going to be working on. Okay, so we will be working on this over the years that I do these mentorships. You know, we will be working on it 100%. So you will have your own plan. Okay, so basically, although you might not have one yet, you will have one with time. So don't worry about that. But know when you are going to get in. Okay. Know when you're going to get out of the trade before you get in, and this is obviously all links back to your plan. Okay, stick to your plan always. Okay, so you should never ever find yourself deviating away or thinking, you know, if you have a trading plan and you go on a 5-loss streak, you don't get rid of your plan totally, because you should have had this plan that is being back tested and it is worth, you know, is probable to be winning over time. So you always want to stick to it, and maybe if you do on a losing streak, then you can adjust it. Maybe there's something wrong with it. You know, if you're going on 20 losses, for example, then there's obviously something wrong with your trading plan. Okay, but really, you know, for example, where I am now, if I go on a few losses, I wouldn't just think, out of the window, this is not working. I would stick with my plan because I know over time I'm going to be profitable. So, you know, you just always want to stick to that plan once you've found it, which again might take a few years. But yeah, again, it does not have to be complex. Treat your trading methodology like a business. Okay, so simple, effective, and rememberable. It does not have to be really complex. Does not have to be really complicated. Those sort of plans are not going to be working for you, I guarantee. Okay, it just needs to be easy, effective, rememberable. Okay, 3 keywords, and always link back to when you're adjusting it. Is this increasing profitability or reducing risk? If the answer is no, don't include it into your plan. Okay, and one other step that I would like to actually mention, or while we mention about losses into this, let me just take a drink really quickly. 1 second, please. Sorry. Ooh. So I would just like to mention this really quickly, that going back to when you go on a losing streak, which is totally normal. Okay, totally normal. It's going to happen to you. Don't get worried when it happens. Okay, but a way to manage this is that let's say as a newer trader, you're still trying to work out what your strategy is. Okay, and let's say that you go on a 10 losing streak. Okay, it's going to happen to you. When you go on a 10 losing streak, don't keep trading. Okay, take a break. Firstly, before I mention, just take a break, walk away from the charts. If you are not trading, you're not losing money, and that's better than continuing on and losing money. Okay, I know from past experience, you know, when I first started trading those years ago, then I done this, and this is something you can learn from. So, you know, I would go on losing streaks and I would continue to trade, or I would start using more money to try and win back that money that I just lost. I would then increase to try and win it all back, and guess what? It does not work. That is not how you should be trading, and then you just keep seeing your money go down and down and down. Please do not do this. Okay, all I would say, instead of, if you go on a losing streak, instead of increasing your money or increasing the amount you're putting into a trade, reduce it. Okay, so firstly, I would just say take a break, walk away, take a few days off from the chart, take a week off, go on holiday, take your mind off of trading totally, come back with a new, a fresh mindset. Okay, because trading is so heavily linked on psychology and emotions. It's a massive factor. Okay, psychology and emotions, massive factor in trading. And if you're not stably, if you're really emotional about going on a losing streak, then you need to take some time off. Okay, come back with a fresh mind. And now let's go over a way that you can adjust this to actual trading rather than the break. Okay, let's say you go on a losing streak, then just simply adjust your trading to 0.5% risk per trade. Okay, so you're going on a losing streak with 1%. Bring it down to 0.5. Okay, so then if you are, when you're on that bad streak, that at least your losses are smaller each time. Okay, then when you have got over that losing streak, then maybe you adjust something, you get back feeling more confident, and you are going, coming back into where you would expect in terms of winning, then you can up this back to 1%. Okay, but it's just being sensible. It never goes up. Okay, it never goes up. Okay. I'm talking about on a losing streak. You could, let's say you start becoming good, then increase this to 2%, for example, but you never increase it up to like 7% because it's doing well. It's just not what you do. All you should be doing is reducing this if you are going on a losing streak. Okay, that's a good idea. Okay. Okay, that's everything that I wanted to mention in terms of this PowerPoint, I believe. And I just wanted to end a PowerPoint before we go on to the charts by saying you cannot afford to be mediocre. Amateurs never win in the game of life. This is just so true in life and in general, in trading, everything. Do not be mediocre. If you want to do something, do it well. Okay. I am a very massive supporter of this. If I do something, I want to be the best at it. Okay, I'm so competitive, and I do not like wasting time. If I do something, then I would not do it half-assed, mediocre. I want to be the best, and I think it's a necessary attitude to have in trading. Okay, you cannot go into trading and just think, dilly dally here and there. No, be the best that you can be. Okay. And yeah, you cannot afford to be mediocre. Okay, you put in the effort, put in the work, and along with me, you will win the game of life and be a champion. Yes. Yes, that's all I wanted to say on this, and that was the last slide to end there. And now, firstly, before I go on to some charts here, then I guess I will just ask if anybody has any questions. Obviously, we were going to go over. Going back to the first slide, so obviously we've covered there tonight we were going to go over the contenders. So yeah, obviously the contenders is more focused on theory. Obviously today we haven't really gone to any technical analysis theory as such in terms of fibs, etc. That will be coming. Today was more of an introduction session, and obviously we've done over the what I've wanted to cover on these slides, and then the calculating risk. Does everybody understand that? And if you do not, then just write a question in the chat now, and I will absolutely answer the question. I will just wait for 1 minute while I take a drink to see if there is any questions regarding this, any of the slides, or anything to do with general trading. Then just let me know right now. Yeah, so that's a good comment by Brandon. Brandon says no ego. Absolutely. Absolutely, you don't want to have like an ego, because that's gonna be, yeah, obviously very not beneficial. Yeah, remove all ego. Okay, so question: what is my trading edge? This is something that I cannot explain in the 10 minutes that we have left here. But what is my trading edge? But I can say the tools briefly. What I like to use the most. So I really like to use, as you probably all kind of know, but I love to use Fibonacci. I love to use Elliott waves. I love to use EMAs, harmonic patterns. Are what I use mostly on a daily basis, but then it's also my methodology that I go through daily. Actually identifying setups, going through, setting my alerts. I'm just very much process orientated, I guess. So I have a really strict process. But yeah, it's way too much for me to cover in the time left that we have today. But obviously my edges that I will be explaining to you over the course of the coming streams, okay, in the coming weeks, months, years, etc., or however long this goes on for. Yeah, I will get to that, but it's too hard to explain it in 10 minutes. So how exposed are you right now to crypto? So in terms of how exposed am I right now to crypto, by this question, do you mean how much of my capital I've got in trades right now? I'd just like to verify that question. So do you mean how much have I got in terms of my overall capital into crypto right now? Is that what you mean by the question? I'd just like to verify that. Absolutely, great job. Makes perfect sense. Thank you, my friend. And yeah, go Litecoin. But while I'm waiting for you, the reply to how exposed. Oh, okay. So how exposed are you right now to crypto? So yeah, in terms of like percentage that I'm using in trades, I will generally try and keep my exposure in terms of let's say that I'm going, on average I'm using between 1% and 5% per trade, and I would try and always keep my exposure. Okay. Yes, how much capital? Cool. So yeah, that's what I thought you meant. So that's a good question, because you want to also, so we're linking, this is the way that I do it. So I'm going to link it back to this. Okay. So in any one trade, it's between 1 and 5%. Okay. And I will never be more exposed than 15%. Okay. That's absolute max. Absolute max. I try and keep it actually below 8%. Okay. So max 15, but generally 8%. Okay. So this just means, obviously, if you are keeping it below 8% and you are using 1% per trade, then I can be in 8 trades at any one time. And if I want to take the 9th trade, then really I should say no to myself, because I don't want to go over 8%. Okay. And then if I'm in one trade with 5%, then that means I can only be in 3 other trades. And that's why I try and keep it not using 5%, because it means I'm limited to the amount that I can put into other trades, if that makes sense. So in terms of equity that you should be exposed to in the market, try and keep it below 8%. Well, this is why, you can do it how you like, but that's how I do it. Try and keep it below 8%. Really max would be 15%, but I don't really do that. That's too much for me, really. But if I'm feeling very confident and there's 3 trades there of high confidence, then I would enter it. But that's unlikely. You want to keep it below 8%, basically. Okay, so I hope that makes sense, and that's how I work it out. So max 8%, and that would be of 8 trades of 1%. Okay, so that kind of is self-explanatory, I guess. So Brandon's question. Past 2 months since I've been watching, taking. Cool. So yeah, Brandon just wrote saying, past 2 months since I've joined, I've been rewatching all of the recorded live streams and taking notes on stuff I didn't know about, reviewing notes and vids over and over again. And absolutely, that is the way that you have to move forwards. I recommend, obviously, this is the first ever one for the Contenders live stream. So this is going to be the only one uploaded right now, but obviously as time goes on, then you'll be able to go back and rewatch all of these streams going forward. But yeah, that's obviously brilliant, and you should definitely be watching back every single stream, a few times. Obviously tonight's one, maybe you can just watch back once because we haven't covered theory. But for instance, when we start getting into the theory, then absolutely you're going to want to watch that back once, twice, 3, 4 times. That's really what you need to be doing. So another question of any ideas / suggestions on how to go about studying. So in terms of like outside in your own time, obviously I've got the books that I recommend. So I would really recommend trying to read some books in your own time. That's a good way of using your time to continue studying. Like, really, trading books are very useful. I have obviously recommended the trading books that I recommend over here, and then on the library section when this loads. So obviously I've listed here some books that I recommend, and if you haven't read these 4 books, then I would say you should read them. So obviously that's the Elliott Wave Principle, the Market Wizards, the Technical Analysis of the Financial Markets, and Day Trading Strategies. Okay, these are 4 really good books. Not in any, if I start one book, I would always recommend you start with is Market Wizards. This is a really good book, so make sure you've read this book if you haven't already, Market Wizards especially. I'm going to add books to this, but you can just see books I recommend. So that's what I would say to you. If you have not already read some of these books, then read some trading books in your own time. Obviously, the more streams that I have out, the easier it is to watch back streams and understand, because this is the thing, if I'm honest, that if you read a book, it's nothing like real life. So you read the Elliott Wave Principle and you go to do Elliott Waves on the chart, you're not going to have a clue, if I'm honest with you. The book is not helpful for real life, but it's good to understand the theory, of course. But the books and then real life trading is totally different, and that's why my streams will help you. But yeah, either way, still the books are obviously beneficial. So another question. Okay, if we enter a bull market, aren't you going to hold 92% of your capital in crypto and you still use 8% for trades? I don't really understand what you mean. So if we enter a bull market, aren't you going to hold 90% of your capital in crypto and still use 8% for trades? No, basically no. Yeah, no, I wouldn't do that. I would never. I'm not sure what you mean really, but I would never go over 8%, even if we're in a bull market. I don't care. Like, it doesn't make any difference for me. I'm not entering more than 8% in active trading at any one time. I just wouldn't do it. Okay. So whether we're in a bull market or whether we're in a bear market, I would, what that 15% max, I would never be above that. So I would never overexpose myself like that, because as I've kind of really tried to show you in this live stream, I'm in this for the long term. This is my main source. This is what I do. I wouldn't like start overexposing myself just because it's a bull market. That's crazy. I would not do that. I'm not in this for short term. I'm in this for the long term, as you all know. So yeah, just because we go into a bull market, I wouldn't suddenly start using 92% or whatever. I wouldn't increase past 8/15% capital in a exposed to the market at any one time. Do I use sequential? No, I don't. I do not use it. So I do not use that. Okay, so yeah, I cannot really give you an opinion because I do not use it. I'm not a key fan of that many indicators on my screen. I like to keep it simple. Okay, as you can see, my screen is really simple. Okay, it doesn't need to be overcomplicated. Well, this isn't my main chart, by the way, but yeah, generally, like just in general, I do like to keep it very much simple, not overcomplicating things on the charts. Okay, as I mentioned before, like for me, simple is better. I don't want to overclutter my chart with lots of different indicators. No worries at all. I'm glad that answered your question. Yeah, just so you're aware, by the way, I just want to quickly explain the website to you all while I've got you as well, of how to actually be using this correctly. Okay. So all this live stream, for example, will be uploaded into the Contenders live streams. Okay, as you can see here, the archive of all of the Contenders live streams. Okay, so the Contenders live stream, this one will be uploaded onto the website in this location, and as we get more and more, they will just be listed and down and down and down, and I will just date each one. Okay, so I will, once this ends, I will upload this to YouTube for you can watch back at any time from the website. Okay, and the same goes for the Champions live stream that I'll do later. Obviously, that will be located into the Champions live stream, and as a contender, you will have access to one a month. And the past live streams, as you can see here for contenders. Okay, this obviously one a month goes to the players as well, so you wouldn't want to click on the past one. You would want to just click on the archive of all the live streams to view them all. These ones where it just says past is just one a month that goes down. Okay, to watch back. So basically, that's the difference, and just explaining how to use that correctly. You want to go in, make sure you're going into the archive of all of the Contenders live streams. And next, I will be obviously uploading as well cheat sheets. The cheat sheet, sorry, I just had a message. I would also recommend you to come through and check these cheat sheets, which I will be uploading regularly as well, onto the website. So obviously we've got two Elliott Wave ones here. What I did think about actually is that before I get into more, although this is not really complex, I would say it's quite easy, but obviously before I start explaining how to trade the subwaves like I've done here, I think it would have made more sense if I just first explained how to actually trade the first waves simply. So I think I might have started a little bit too complex for the people that don't understand Elliott Waves. So yeah, apologies for that. If you have no understanding of Elliott Waves, then yeah, you will soon. But yeah, just another thing that I would say is just be careful with the cheat sheets. That sometimes you might not understand if we've not covered that yet. So obviously we've not done or I've not taught yet Elliott Waves on the Contenders live stream. Obviously this is the first one, and I've uploaded some Elliott Wave cheat sheets. Yeah, just don't get anxious thinking you don't understand. It will come with time. Okay. Did I get it correctly that live streams? No, so there's one. It's one live stream per week. Okay, yeah. So one live stream a week. So obviously today being the 5th. Just so you're aware, I have a feeling that I will be moving because obviously I got the champion live stream later tonight. So obviously if you're a champion and you're in here, because obviously this is open for contenders and champions, and I know that we have got some champions in here. If I can see from the comments. So obviously the champion live stream as well as tonight. So what I'm thinking of doing is moving the contenders live stream to midweek. Okay, to midweek. And then I will do the champion live streams on Sunday. So then I think I might be moving sorry, this is all in Spanish, so it might be a bit confusing for you, but the Domingo. So this is obviously Sunday, and then I think I might be doing the contenders on maybe like a Wednesday or a Thursday, and then champions on Sunday rather than all in the same day. I will think about that later tonight and see how I feel once I've finished the champion one as well. But I have a feeling I might be doing that, to be honest. So I'm going to see how I feel tonight, basically. And if it's fine, then I'll keep it all on Sunday. But if not, then I'm going to have a one midweek and one on Sunday. I will confirm, obviously, with you all tonight or / tomorrow when the next one will be. Okay, so it might not be necessarily next Sunday. I'm going to see personally how I feel tonight, whether I want to do 2 in one day or even it up. So just one midweek, one tonight. Okay, so just be aware of that. The next one might not be the 12th. It might be Thursday or Wednesday. I will confirm. Obviously, I just want to make this clear as well, that the Discord is for communication. So if there's any communication that I need to do, it will always be through Discord. The website is really just for looking back at old live streams, looking at the cheat sheets, looking at the library. I'll update the frequently asked questions, obviously access where you can view the private mentorship section. Okay, the courses, which I have not released any yet. Okay, so this is actually empty. I removed the forms, so the forms are go on the socials, the blog, the contact us. When this loads, obviously this is just a page linking to Discord invites, tweets, and new videos, etc. So basically, I just want to make it really clear that all communication is via Discord. Okay, so all communication, actually writing, updating charts, etc., is on Discord, and the website is more for looking back through content. Okay. So if you need to contact me, then obviously we do have this contact section on the website. If you want to send me an email, like you can send an email to info@chartchampions.com and I will get back to you. But really, the communication is through Discord. Okay, and the website is more for example, now where you could go onto videos and contenders live streams, and you'll be able to watch back through the the archive that we've got going on here. So I hope that's made that clear as well. Okay, so all communication through Discord. Yeah, and I think that's about everything. So obviously, yeah, today was more of an introduction session into the world of what we're going to be going through in these live streams. That is everything that I wanted to cover today. Just saying hello, welcome to the first one, going through this PowerPoint, and yeah, just saying that these are, so contenders is going to be focused on the theory, and yeah, I look forward to seeing you all again in the next live stream, where we will now be beginning, properly going into theory and then ending with technical analysis. Okay, technical analysis. So that's how we're going to be going on for the next session, and I hope that you enjoyed the introductory first ever contenders live stream, and I hope this has been beneficial. Again, there was no more questions at the end, so I take it you've all understood what I've covered today, because if you didn't, you should have asked. So I take it, yeah, it hasn't been really too difficult today, has it? So I imagine everybody's understood that. You're all clever. And yeah, let me know if you have any questions. If not, then yeah, thank you everybody for joining me today. I will now upload this onto the website, and yeah, for the champions here in the live stream today, I will obviously see you all later on, which is obviously going to be starting in about 3 hours, the champions live stream. So yeah, we'll catch you all later if you're in that, or if you're just a contender right now, then yeah, thank you, and I'll catch you in the next live stream. Cheers, thanks, bye.